Hey, what's up, everybody? It is Thursday, May 5th. Look, today was a rough day. What can I tell you? Sometimes I wonder, maybe it's not a good idea that I do these videos every single day, because I think some people get the impression that, this is like a day trading service or something. It's not. I'm a macroeconomist. And so I'm really kind of looking at the big picture all the time. But hey, I do these things every day. I just like to bring you some information. All right, let's go over it. So we wiped out yesterday's gain and then a little bit more than that. The May 2nd low in the market averages is still there. And we might take that out, but I think if we take that out, it'll be a marginal new low. I was expecting maybe somewhat of a little pullback off of yesterday's rally. Actually, I was hoping we'd see a continuation of that rally. I thought, that sentiment being so negative, and like I said yesterday, with that rate hike being priced in now, for months and months we've had that rate hike priced in, and then some, many more. I just felt like the market was ripe to rally. I was right for one day, and then we wiped out everything today. Not so terrible. I mean, like I said, we wiped out yesterday's rally, and then we went a little bit further than that. We'll see what happens in the short term. In the broader picture, I'm sticking with what I've been saying for a number of reasons. First of all, even set aside the sentiment stuff, because that is not a good timing indicator, and it's not, from a macro perspective, a macroeconomic perspective, that's not giving you any, I'm not adding any economic information, or I'm not providing any economic information to you. That's a different kind of analysis. That's just market psychology, but that's a factor. But I will say this, and I went and I looked again today. The fiscal flows, despite the fact that, we've seen a slowdown compared to last year, and despite the fact that the deficit is significantly lower than last year. I mean, we're at least 1.3 trillion below where we were last year, and that's a big drop. And everybody's talking about how the savings rate is down. Well, the deficit is like the accounting record of savings. I mean, that's how much the non-government's financial balance either goes up or goes down. I've explained that many times. But that savings rate will start to crawl back up a little bit as the government spends back out that big tax haul in April. And I think this was the problem. Let me go over this again. Let me characterize what I think happened. Prior to April, it looked like the market was stabilizing. It looked like we were trying to bounce back. Let's be honest. I mean, corporate profits, and I think I mentioned this yesterday, corporate profits are at a record. They're growing at a pace that we have never seen before. I think something like 13% year over year. Last year was a record 11%. We're beating that. This may sound crazy to you, but stocks are historically a good inflation hedge, just by virtue of the fact that companies have the ability to raise prices and increase their margins. Now, again, getting back to what I think happened, like there's been so much worry and fear and hysteria over monetary policy, and I've said so many times that monetary policy is like a mental illness. I mean, that's all people ever look at. That's all anyone ever talks about. What's the central bank going to do? Interest rates are a panacea. They're a cure or an ailment for everything. I mean, it's insane. It's ridiculous. Nobody even understands what a change in interest rates mean. I try to explain this, I don't know, almost every single time I do a video, that it's just a redistribution of income, just like inflation is a redistribution of income, just like deflation is I mean, it's also price setting. But these rate hikes, 50 basis points, I mean, you're talking about, what, a 1% Fed funds rate. Historically, that's like ridiculously low, still ridiculously low. It's not, the real inflation that we're facing now is a problem of supply chain. It's a problem of these sanctions that have now really, the main impact here is on energy and on the disruption in Russian oil flows. I mean, it's a huge factor, and I've been bullish on oil, and that's actually one thing in my portfolio that's helping out. So let's get back to it. So it looked like that, amid all this worry about monetary policy, the lead up, and we had speeches by Fed people every single day, like Bullard at 75, let's go 75, come on 75, like getting people all like in a frenzy about rates. And everybody was freaking out about this. And so the market was obviously, understandably unnerved. I wasn't, because I understand what this is all about. But that's all people look at. It's like a psychosis. It's a mental illness. That's, everything in the financial universe comes down to one thing in people's minds, and that's interest rates. Which, the reality is that it's been proven so wrong over, decades. You cannot manage the economy with interest rates. Anyway, I don't want to segue into a whole theoretical discussion about that. So it looked like March we were starting to stabilize. I think if you could even go back to some of my videos, I mean, some of you are accusing me of saying, oh, great job, Mike. You told me to buy and it's going down. Look, if you're buying into this dip and if you have a macro, perspective, you're going to be okay. It's just a question now of being a little bit patient. And then what happened, let me continue with my analysis or my, characterization of what happened. I think, we had this huge record tax haul in April, and that just sucked all the liquidity right out. Now, I understand, and I should have been, probably saying something about this, and I did. I made a video about taxes being a potential problem. I think if you go back and you look at my videos from last week, you might see that. So that tax haul, almost $1 trillion in April. $1 trillion sucked out in April. I mean, you want to know why the savings rate is going down? Well, when the government's sucking away $1 trillion, yeah, you're going to have $1 trillion less in the financial balance of us, of the non-government, man. Not hard to understand. But again, that's going to be spent back out. I mean, the government is not going to end the fiscal year in a surplus. We're going to still have like $1 trillion something deficit, which sounds tiny compared to the last couple of years, the pandemic years. But I mean, $1 trillion deficit, if you take away the pandemic years, anyone who would have been talking about $1 trillion deficit, even in the times of the Afghanistan and the Iraq war, and people would go, what, $1 trillion deficit? Are you kidding me? Now it's like, $1 trillion deficit, that's it. That's, that's something to brag about, right? Biden's going to be bragging about that. It's still a big deficit nominally. It's not really that big now as a percentage of GDP. Now, that is a drag, but what I was going to say that right now, and I went back and I looked, the daily flows, the leading spending flows, and I went all the way back to the beginning of the fiscal year, October 1st. I mean, it's in a slow, steady, rising uptrend. What does that mean? Like every day, the government's spending a little bit more and a little bit more, all right? You can go back to my videos late last year when I said, look, we're going to have increases in Social Security. You're getting the cost of living increase in Social Security and all these other payments, military pay, everything got boosted. And that's reflected in this upward trend of daily spending. It's very, very noticeable. I should put up a chart. Maybe I'll put a link to a chart. I actually sent out a chart of this to my subscribers. Actually, if you want to get it, go to my website, Pitbull Economics, and sign up for a 30-day free trial, and I'll send you the chart. But it's very, very obviously trending higher, and that's a positive thing. I mean, those are, I talk a lot about the swimming pool analogy, the water being pumped into the swimming pool. Well, guess what? It's coming out at an accelerating rate. Now, it's not like what we saw during the pandemic when we had stimulus after stimulus. But it's very encouraging, the fact that even without the stimulus, and the stimulus has ended, it's still rising. So that water is flowing out of the pipe into the swimming pool. The problem was in April, the pool had a big hole in it, which drained out all the water. Okay, it was like the pool was hit by a meteorite in April. It not only splashed the water out, it made a hole in the pool and it drained out all the water. So now that we called in the masonry guys, they patched up the pool, and now the pipe is flowing and it's going to fill the pool back up. But it takes time. It's not like it happens overnight. Like, boom, the government doesn't take away $1 trillion and then, boom, the next day it spends back out $1 trillion. So that's the problem, and that's why it's still a little bit shaky now. Look, I'll say what I said yesterday. I'm not worried about interest rates. That's stupid. All right? And, inflation, there's two sides to the coin. You can't, you just can't talk about a terrible stock market at a time when companies are making record profits. I mean, you really have to sit down and logically think about that. Now, some companies, admittedly, I'll say this, some companies like us consumers might be on the wrong side of the inflation. In other words, their costs are higher and they're not able to recover that. I give you that. And that means there's sector rotation and stuff like that going on in the market. But by and large, with profits rising, the market's going to reflect that at some point. Now, there's an old saying, the market always tells the truth, but it doesn't always tell the truth on an instant. Read the book, Reminiscences of a Stock Operator. It was written by Jesse Livermore under the pseudonym, the pen name of Edwin Lefebvre. And he has some great quotations in there. And, remember one story, I told this story so many times, when he shorted Union Pacific back in the early 1900s. It was like 1907. And everyone said he was crazy because Union Pacific was the leader of the market advance. It was the strongest stock, and he just had, a gut feeling that something was going to go wrong. And he was shorting Union Pacific like crazy, and his friend said, "You're out of your mind. You're going to, what are you doing?" He said, "I just feel like, something's going to happen." And his friend said, "Jesse, the market always tells the truth." To which Jesse responded, "The market may always tell the truth, but it doesn't always tell the truth on an instant." And then a couple of days after that, you had the great earthquake, the 1907 earthquake in San Francisco, and the great fire that happened, and it destroyed all the railroads of Union Pacific, and the stock went crashing. And at that time, that was his biggest score that he ever made. At that time, he cleaned up. But I mean, the moral of the story is, yeah, the market may always tell the truth, but it doesn't always tell the truth on an instant. If you've never read that book, you should really read that book. When I had my floor brokerage company, and I had my clerks and my brokers working for me, I always used to buy them that book as a gift and say, "Here, read this book because it just has so much wisdom in there." Some people might say, "Well, how wise was he? He ended up killing himself in the bathroom of the Sherry Netherland Hotel here in New York City, put a bullet in his head after losing like 3 fortunes." But, that being said, I'm not worried. I'm not worried about interest rates. If there's something I'm worried about, it's fiscal. And right now, after looking at the trend of what's going on, and even despite all the terrible efforts by, the White House to curtail or not get their programs passed, and, talking about trimming the deficit and bragging about that, nevertheless, we still have a nice upward trend in spending, and that's what it's all about. So I want you to think about what happened in April. The swimming pool got a big hole in it. All the water got drained out. A meteorite came down out of outer space. It crashed into the swimming pool. It made a big hole. It drained all the water out. We got the masonry guys back. They patched up the hole. The water's flowing out at an accelerated rate now, not the same accelerated rate as, in 2020 and 2021, but it's still, a respectable rate. And the pool's going to get filled back up again. And everybody's going to be okay. All right? All right, that's it for today. I hope I lifted up your spirits. I'll see you tomorrow. Bye.